Hello and welcome to the latest edition of the AIM Growth Partners podcast. Today, I'm really excited for this episode because I'm joined by Hari Srinivasan, the CEO and founder of iCover Insure. Harry, welcome to the show.
David, thanks for having me. Excited to be here.
I think the overall kind of overarching mission of the company is to make purchasing life insurance as simple for people as possible. So I guess by way of a bit of an introduction, please give the listeners a bit of an insight to you and the sort of story behind the business before we kind of jump into it in a bit more depth.
Sure. So my partner, Nicole, and myself, we started iCover in 2020. Both of us have our personal stories and obsession in terms of, why life insurance and why we've decided this space. So it's a personal obsession and industry experience as well. Both of us are from the industry, and that prompted us to look at the process itself and, how do we make it accessible? And by doing that, how do we make it more affordable as well? And we started iCover in 2020, not good in terms of timing, but we survived, and now we have a substantial client base. We launched our direct consumer platform last year as well, and a lot's going on within the company in terms of traction and growth.
Perfect. And I think it's important probably to mention at this point that, this is not your first business venture. In fact, you've previously successfully built a business. So talk a little bit about that and that kind of background, if that's okay.
Absolutely. So I've always been in technology, and thank you for asking this. My previous company was around, mobile apps and mobile technology. So we were one of the first ones to come up with the digital publishing app, and the app that you see in restaurants now, where there's a kiosk and you order food, and then it goes into the kitchen and it makes it seamless. We were one of the earlier ones to come up with that technology, but I think sometimes you're too early for something, way too early for something, and then the world catches up.
The overarching kind of mission of the business is simplifying the buying experience of life insurance. Talk to us about the problems you identified with the experience of buying life insurance as it stands that ultimately inspired you to set up iCover.
Yeah. So at a personal level, my partner, when she was looking for life insurance, the process was complicated. It took a couple of months. You got to, go out of your regular schedule to purchase something like this. So she passed on it and, had a big personal situation that, how would I say it, really, she lost her husband at an early age with 2 kids. And that, I feel, is such a big impact in terms of not having life insurance and what she went through. So that was something that she has taken on personally in terms of, making sure that she is on a mission to make the process as simple as possible. And then as we start to dig in and go through the process, there are other things that matter in terms of, simplifying the whole supply chain. And that's what we're doing, taking on the entire supply chain to make sure we streamline the whole process and make it better for everyone.
So thanks for sharing that. And it'd be good to get a bit of a look beneath the hood as to seeing what, streamlining and simplifying the process means and what it looks like, I guess, at the end for the end customer. But talk us through that, first of all.
So we do have several online platforms available at the moment. We do have companies trying to, shorten the issuance cycle, if you will, from months to, sometimes weeks and things like that. But what we've done with iCover is, any product on the iCover platform, and then you can go from start to finish in under 5 minutes. That's what we've done to the overall process in terms of simplifying that and getting it close to any other purchasing behavior, right? So customers or consumers are used to a certain kind of purchasing pattern or behavior now, and we're trying to get life insurance close to that so that it doesn't become an anomaly and people go like, oh, I'm not subscribing to that because it's complicated. So that's what we've done from a process perspective.
And I know you mentioned the direct-to-consumer product you've launched as well, but it sounds like there's a couple of things there. You're helping the customers by reducing the time to sort of 5 minutes to end. So a product they want and probably desperately need, they're able to get their hands on and mimicking other purchasing journeys people get, whether it's sort of buying clothes or buying medication or whatever it is people do online. But presumably turning attention to the business side of it, talk us through the kind of the main benefits from the insurer's perspective of using a platform like iCover.
Great question. There's always a notion that speed means cutting corners or, trying to do something in an expedited manner, not thinking through. So for the insurers, the biggest value proposition is we help them with sales, increase sales. And the next big challenge that the entire industry deals with is the customer acquisition cost. So we not only increase sales, but also reduce customer acquisition cost through iCover. And this is like the big benefit for the insurers, and this is what draws them towards a platform like iCover.
What were the biggest areas of kind of inefficiencies and bottlenecks you noticed?
That is a wonderful question. Thank you for asking that. I think a lot of advancements, especially on the life side, has been around the UI UX, like trying to make it pretty, trying to make it more intuitive. But what we felt based on our research and the underlying benefit of iCover is our AI algorithmic underwriting engines. No matter how pretty your website is, how fancy your UI UX is, when the underwriting process happens, everything comes to a screeching halt, because that's where you need to add more efficiencies, because the sooner you issue, the better it is for the consumer. So, you can bring them through the process pretty efficiently, but when it comes to underwriting, the amount of questions you ask them, the amount of time it takes, that's what we mainly focused on. And that's one of the main things we bring to the table is our algorithmic AI underwriting engine that goes hand in hand with our process. And our process and the engine in combination can issue an application from start to finish in under 5 minutes.
What kind of resistance have you come up against? I think particularly when AI is sort of flooding the market everywhere in this revolutionary technology, have you encountered much resistance from insurance companies not wanting to challenge the status quo?
Absolutely. Lots of challenges, because especially we deal with risk, and that's what the engine does in terms of risk assessment. So initially, especially early days, right? Like when you don't have a client, or when you have a handful of clients, there's a lot of resistance in terms of understanding what exactly we're doing. And at the same time, a lot of AI systems are like a black box. And, people don't understand the inner workings of that. So we had to think through that as well. One big benefit both my co-founder and I had was both of us are from the industry. We understand this. So sometimes, David, you see, technology folks from another industry or a different vertical trying to solve a problem. And, it takes time for the industry to warm up, because they feel a certain level of business experience or business knowledge kind of helps or expedite your path in terms of the problem you're trying to solve. So for us, that was a huge benefit, both of us working for a big reinsurer and taking this on. We already had the initial credibility because, okay, we are from the industry. But what we also did in terms of taking on these challenges was early on, one of the biggest things we learned and did was creating some sort of a risk simulation tool that we built that basically shows the outcome of our engine and how it qualifies and quantifies risk. So that alleviated a lot of concerns, because we didn't go to the market and sell this as a black box, as a fancy tool that's going to help you speed up your whole process. There's a logic, there's a method to this. And if we can look at your product, life product, and your guidelines in terms of how you process the product, we can simulate the permutations and combinations in terms of risk and how our product would reflect your guidelines and would show how we would segment risk. So that helped us initially. The simulation tool that we created helped us penetrate and helped us alleviate a lot of concerns that companies had while working with us.
Fascinating. I imagine it's, as you said, such a risk-adverse sort of industry. So actually even trying to get on the conversations must be incredibly difficult. And no doubt it was hard as well when a lot of things are hypothetical in the first instance of if we cut down the time your customer acquisition costs are going to go down by this, your sales are going to go up by that. Now you have several customers and you have that kind of proven track record and success. What is the average benefit insurers see when they're adopting or using a platform like iCover in terms of, increased sales, decreased kind of customer acquisition costs?
Awesome. Thank you for asking this great question. So what we do with every insurance company we work with, David, is we add KPIs at the end of the project to be measurable, right? So not only are we doing digital transformation, but we also have some benchmarks that at the end of the project when they go live, and for a certain period we track all of that and use it against the the KPIs. So at a bare minimum, looking at that with all the client base we have, at a bare minimum, we help clients increase sales 20 to 25%. That's the minimum. And in terms of the acquisition costs, 30 to 40% across the board for carriers we work with.
And turning attention to, how you've built and grown this business, one thing, as I mentioned at the start, we were going to kind of come on to is your decision to go down the bootstrap route. So talk me a bit around that kind of decision and why you've kind of stuck true to that.
So when we started, we were dealing with a couple of things. One was this is a brand new, untested kind of engine and a new philosophy that we are taking to the market. So there was lots and lots of skepticism, and nobody wanted to, invest or get close to iCover because they wanted, a couple of customers to adopt this and see if what we're telling them is actually true. So that was one thing we were dealing with. And the other thing was COVID hit and everyone was trying to figure out their own personal situation, right? With all due respect, the whole world was upside down, as you and I know. So everyone were in their own pocket trying to figure out, how do I get off the ground and take care of my immediate needs, business as usual, all of that. We were put in a spot where we had to find ways and means to actually move the company forward without giving up the dreams. We had to, bootstrap for a solid 2.5 years. And then when we got our client and then showed some progress and, we got some investment help from an angel investor and then moved it further.
And I guess it would have been so tempting during those sort of early years to take money. But from speaking with previous founders, I guess the challenge is with seeing as it's such a personal mission you and your co-founder are on. Naturally, when you take money, typically you will get swayed in different directions and, the investors will want you to do something and it might not be quite aligned with what you're doing. So I guess reading between the lines, that was probably very important for you of actually drill down on who you're helping, how you're helping them before taking in that kind of external money.
That's an excellent point. So we still have the same philosophy. I don't know how long I can keep up the philosophy, but even now in terms of adding partners who can help with capital infusion, our thought process is always like, will this partner help further the vision or change it up so that the initial intent is kind of lost. Yeah. And a lot of companies, as you rightly said, go through that where the philosophy completely changes once they take on more and more money. But for us, we've stuck to the initial goals and the vision up until now. So only time will tell where we go from here.
So talk me through some of the challenges you've encountered at iCover when you've been growing it and scaling it that you think are quite unique to the insurance space.
Yeah, I think compared to my first startup versus iCover, there are certain kinds of technology that is, I would say, more prone to a shorter sales cycle. Let me put it that way. And then there are certain products where it's intense. And that's where, for me, when there is generalization of businesses saying, oh, you've done one, now you can do the other, I say that's a wrong concept in my humble opinion, because each business has its own nuances in terms of complexities and what it brings to the table. So there are some learnings that I would absolutely say that can help with your other business. But I would say my first business had a shorter sales cycle because we were not dealing with risk. But we were early on. So that was a challenge where potential buyers would lecture me that I don't think this product has a market because this is a different kind of business. So two different parallels. in both my first startup and second startup, were some learnings absolutely that helped, but two different universes. That's how I look at it.
And what I guess have been the biggest challenges? You said you're dealing with risk in insurance, so I guess the decision making process is a lot longer. You're not dealing with kind of mom and pop shops that might be able to buy this technology. The sales cycle is longer. So talk to me a bit about that. What's the average sales cycle? What's that sort of process? And yeah, talk a bit about that.
Yeah, the average sales cycle is anywhere from a year and a half to like 4 years now in terms of
Wow. So you got to be pretty patient then.
yes, yes. And I think the trick to sustenance and being afloat is actually diversification. And that's what early on we've learned that and we've practiced that. We've used that well within iCover. And, that kind of helped us grow year over year because we have a fascinating product. Intellectual property is fascinating in terms of what it does, but we had to build all the other ancillary pieces around to keep the company afloat, to break the sales cycle, and also be competitive.
So talk a bit about that decision to diversify this sort of product offering. When did that sort of turning point come? And yeah, talk me through that.
Yeah, so some of those data points we kind of learned by being in the industry. So anything to do with risk in the industry, we kind of, my co-founder and I know that it's going to take time before we get our sale and before we move. So then when we started iCover, we, even from our second year or so, we started putting a roadmap in terms of, what are the other ancillary pieces we need to build to weather the storm, because it's not going to be a normal sales cycle for us. So it started on early. And if you see in the last 3 years, we've kind of built almost the entire supply chain of technology for life insurance carriers. We have every single product that a carrier would need to do their business.
So with these kind of ancillary products, essentially tackling the kind of the low hanging fruit, the other kind of problems that maybe didn't require as much analysis of the risk and didn't require so many meetings and stakeholders to get it over the line.
That's exactly right. Yes, there are these products, more operational, and they are mandatory from an operational perspective, right? So that kind of shortened the sales cycle for us.
Gotcha. So I guess from a procurement perspective, a lot of the kind of the managers can sort of sign off on this without needing the chief risk officer and compliance and whoever else on the calls, which inevitably slows things down.
Precisely, yes.
And talk to me as well around, you mentioned earlier on in the call that you've launched your platform, the D2C platform there. So we've spoken a lot around the kind of the business to business use case. Talk to me about, the rationale and the kind of the launch of the direct to consumer product.
Absolutely. And thank you for the question. It was pretty much imminent for us to go from the white label B2B to B2C. We are one of the fastest platforms in terms of conversion. So logically, a lot of carriers approached us for direct consumer and setting that up. So once again, right, we talked about the sales cycle. Maybe this is my karma, I would say. The direct to consumer, in the US at the moment, there's only 2 to 3% conversions happening there. So that's a brutal initiative to take on because there's not a lot of data available. And usually with marketing, as you very well know, there are a lot of playbooks, but there's hardly any playbooks available here to get inspiration and go on. So this is also, I would say, like a new initiative that we launched, and it's going to take time before we start learning consumer behavior online and trying to see how we can sell them insurance, because it's one of the toughest products to sell through an agent, leave alone direct consumer. But we know that there's majority of the population at some time in the next 5 to 6 years going to be online. Every transaction, most of the transactions are going to be online. So we have to crack the code on that to see how we can be a major player there in terms of helping carriers sell to consumers online.
I think it's so interesting. You said that incredibly low conversion rate, inevitably with the reductions in time, reducing it to 5 minutes will drastically improve this conversions. But I think something to be kind of aware of that we've not even sort of spoken about is And it's going to be a little bit different your side of the pond versus mine, I guess, in the UK, because we've got, free healthcare, we've got free this, free that. Yes, people are less mindful, even less mindful than maybe they are in the US. But even still in the US, it's typically later on in life or when people have had these big life events that have scared them, that have shocked them, that prompt people to get insurance in place. So I guess talking a little bit about that presumably is going to be a huge problem for you that I guess you were alluding to when you were talking about the direct consumer in insurance.
That is a very good point, David. Yes. I think the challenge here is, and especially going back and drawing a lot of younger folks into purchasing life insurance, is making it more attractive from a product perspective, not wait till, like you said, till they have a life event and think about life insurance. How do we make it so that it's part of your mainstream, doesn't take up too much time, but at the same time is providing value in your day-to-day life? And that's the other challenge for insurers and platforms like us as well is, well, we've been selling through the agents for a long, long time. We have so much data to look at that and see how we can modernize that or create new products. On the direct consumer side, it's like going to Mars and figuring out what kind of data we can get there to make it more appealing and attractive.
Now, this bit might not stay in the official podcast, but an area I find fascinating is that, I'm not sure if we mentioned it before, but that roundup function, when you go to the shops and it's, would you like to round up and donate 43 pence or cents to this charity? I was on an investor event through some company I'm invested in, but essentially they were an ESG company who were using the same sort of thing of round up the extra 43 pence and we're going to invest it in some, projects that do well. They said when interviewed, like 86% of people said that they want to invest in these things, but it's hard to know which ones is the money actually genuinely going to these good causes and which ones are just a front for whatever else. So there's this big trust problem. But I wonder, and I'm definitely not technical enough to sort of have the answer, but I wonder if that's a thing that, if people can get the life insurance set up, I guess the extra hurdle is going to be getting people to regularly commit to paying and make, exactly making deposits. But I wonder if that roundup function, if you've already got your life insurance little pot there, if that could be a good mechanism of incentivizing people, because then at every point of transaction, they're thinking about, oh, actually, yeah, that extra 20, 30 pence, that could be going towards my life insurance.
That's a brilliant way of putting it, David, because what you said makes complete sense in terms of, making it part of mainstream, but actually trying to create this pot that can fund, things like that. So that's what, as an industry, we need to come together, because that's how you can solve this direct consumer conundrum. Because on one side, we have to create products that can be sold by the agents. And I think the industry has a good grasp on that. And they're working towards, periodically putting out new products. On the other side, I think we have to look at it totally with a different lens and say, how do we, like you said, right, is there something that can keep it meaningful, keep it going, so that you don't have to put pressure on that recurring premiums and not having instant gratification and wait till you get something. So yeah, it's a paradox, and we will absolutely figure it out, but I think it's going to take time.
Absolutely, I have no doubt you definitely have the patience for it and making great inroads. So I guess wrapping up, I'm really interested, and this is going to be probably a big question. Looking back sort of 6 years prior to iCover ever existing, and looking at life insurance as people kind of perceive it, as the customers perceive it in the market, that necessary evil for that doomsday that we all hope doesn't come, but we know there's a chance that it is going to come. We know we need to get it, but none of us want to get on the call, be passed and pushed from pillar to post in this long, lengthy process. iCover then enters the picture sort of 5-6 years later. If we're looking ahead 5-10 years, where's the life insurance market going to be at? And as I said, it's a long-winded question. So what's it going to be like from a consumer perspective, and what's the marketplace going to look like? How's the perception of life insurance going to change, and how's that sort of journey from a customer perspective going to change?
It's a fascinating question. In my perspective, in my opinion, the industry has to go to a stage where they start looking at living benefits more than death benefits. So that is coming, and that has to come quickly, because if we have to get in the millennials and Gen Zs, I think, like you said, waiting for something to happen, and God forbid that doesn't happen, but getting protection, I don't think that's the mindset at the moment. I think at the moment everybody wants living benefits, which is, what am I getting out of my life insurance policy, whether it's cash accumulation or long-term care kind of riders, or critical illness or accident coverage or something like that, right? What am I getting? So adding more of that will be the future in terms of providing living benefits. And a component of that, right? You have the chassis, which is built on death and death benefit, but we're going to add so many different meaningful features that's going to help folks with living benefits. That's on the product. In terms of distribution, there's going to be a different way that these products will get distributed in the future. Like, being more like mainstream. How do we, add it so that they don't see it as a variation, going out of your way and purchasing this? How do we bring it into the mainstream distribution? So that's the other big change that will happen in the future. So in my opinion, products and distribution, a combination of that's the future of life insurance.
Thank you. And it's going to sound very AI-ish saying this, but I guess it's not just an insurance problem. It's a mindset one, isn't it? And not just looking at insurance. There's so many world problems we could solve if we could get people. You talked about sort of instant gratification earlier. If we can get people start thinking about their future state and the desired future state and working towards that, and sort of eliminating that quick fix, what I want now, it would probably solve so many of the problems, because people would think about, what do I want the life of my family to look like after I pass, or heaven forbid something happens to me. But unfortunately, we live so much in the present, and we live in this dopamine rich world, whereby anything that needs a bit of, short-term suffering for longer-term gain is out the window, and you're fighting an uphill battle, aren't you?
So that is a very, very interesting perspective. I respect what you said. Yes, I think if you look at your long-term mapping, there is definitely a place for this, but we have to make it more attractive so that it fits into the long-term puzzle. Very well said, David.
Thank you. Well, look, it's been such a joy learning about kind of the mission and the journey you've been on over the last 5.5 to 6 years. All that you've kind of built, as you said, you've got a product for basically every sort of thing that like an insurance or a carrier needs. You've massively shortened and removed a lot of the frustration from the life insurance purchasing process. You've cut the time down to 5 minutes, and you've improved outcomes for the carriers as well. As a final thing, I've asked you constantly kind of throughout the call your kind of greatest lessons, your takeaways. But are there any kind of final thoughts or things you wanted to leave the listeners with that we've not covered off?
No, I work with a lot of early stage startups. And one thing that I always tell them is, as a founder and co-founder, always think about the impact you will be bringing to the startup, right? Rather than the idea, funding, everything else, you personally, what is the impact you're creating with the startup or with the idea? That's critical for any idea to move that forward.
That, and I'm going to leave that there. That's such a beautiful thing to leave the listeners with. So, Harry, look, thank you so much again for your contribution. It's been an absolute pleasure.
My pleasure. Thank you. Thank you for having me, David.